Warm greetings to our viewers, a very happy new year and welcome back to Bulletin Bites. Latest news on law, tax and business in India for Q4 2023. With a strong last quarter in 2023, India is one of the fastest growing large economies of the world. We are the largest and most stable democratic regime with key contributing factors like 75 years of democracy, key achievements being 100 times rise in GDP, 500 times rise in total exports. In fact, highest exports in the history amounting to USD 770 billion in the last year. With major reforms and successful implementations, 2023 was indeed a very good year for the Indian economy. Kudos to that and cheers to a fresh start into 2024. On this note, let us begin Bulletin Bites Q4 2023. Starting with relevant updates by the Ministry of Corporate Affairs. The first important update is that every company is mandated to designate a person who will be responsible for providing information to the Registrar of Companies regarding beneficial interest in the shares of company. Another important update issued by MCA to enhance transparency and efficiency in the securities market is that every private company is obligated to issue the securities only in dematerialized form within 18 months from the closure of the financial year, that is 31st of March 2023. Moving on to the next update, especially relevant for limited liability partnerships in India. With this update, MCA has notified the Limited Liability Partnership Significant Beneficial Owners Rules 2023, specifying the definition of significant beneficial ownership (SBOs), along with procedure and steps for the LLP to identify the individual who is the SBOs in the LLP and causing such individual to make a declaration. Upcoming updates are with regards to environmental laws in India. For companies dealing in electronic products or plastic products, it is to be noted that the Ministry of Environment, Forest and Climate Change has made some significant amendments under the Battery Waste Management Rules and Plastic Waste Management Rules. As per the recent updates, producers and recyclers of the battery waste are required to maintain information relating to the total weight of battery waste generated by them and deal with only registered entities for battery waste recycling. Furthermore, the brand owners with plastic packaged products should ensure that the name and registration certificate number of the company is printed on the plastic packing. The plastic bags used for handling of the products should be made of biodegradable nature. Another update, which is especially relevant for manufacturing industries in Tamil Nadu engaged in equipment like high pressure boilers, valves and fittings, pressure vessels and package boilers. Such manufacturing entities now fall under the category of public utility service for a period of 6 months, due to which such industries are prohibited from inflating their prices without previous approval of the state government. Now moving on to transfer pricing highlights. There have been some interesting rulings given by various tax tribunals across the country. The topic of intra-group services has always remained a highly litigated transfer pricing issue. In connection with the same, there has been a recent ruling of the Mumbai Tribunal where the arm's length price of the service transactions is accepted under TNMM method. However, the important point to note is that the tribunal, for coming to the said decision, did take a note that the taxpayer had maintained sufficient documentary evidence to provide actual receipt of services and the importance for its overall business activities. The said ruling is important for all the companies that usually receive centralized services from their group company, but do not maintain documentary evidence in support of the actual receipt of services. In another ruling of Hyderabad Tribunal, the tribunal has held that outstanding receivable is an international transaction. The tribunal directed to compute national interest on outstanding invoices beyond a credit period of 30 days at the rate of 6% per annum. In this regard, the companies are advised to track their outstanding invoices from the group companies and should try to recover the amount within the agreed credit period. You can refer to our newsletter for the case law citations and taxpayer names for any of your future reference. Dear viewers, we would now inform you about some of the key changes under the GST regulations. During this quarter, the amendments which were recommended in the 52nd GST Council meeting are notified for implementation. One of the major announcements for exporter of services was also recommended that INR remittances received via special INR Vostro account permitted by RBI will be considered for qualifying the services as exported. Further, the other major recommendations of the 52nd GST Council includes amnesty schemes for filing of appeals against demand orders passed on or before 31st of March 2023, taxability of corporate guarantee provided for related persons, taxability of personal guarantee offered by directors to the banks, etc. Let us swiftly move on to the direct and international tax updates of this quarter. In October 2023, the CBDT provided a major relief to domestic companies claiming concessional rate of tax by issuing a circular to condone delay in filing the prescribed form. Quarter 3 saw some very interesting income tax decisions by the Indian Supreme Court, which are being and will be discussed for years to come. In a path-breaking decision in the case of Nestle SA, the Indian Supreme Court interpreted the most favoured nation, that is, the MFN clause found in the protocols. The Supreme Court concluded in favour of the Indian Tax Department and opined that a notification is necessary and the MFN clause does not have automatic application. Based on information available in public domain, review petitions are filed against the decision before Supreme Court for reconsideration. In another important judgment, the Supreme Court held the variable license fee which was paid to acquire the right to carry on the business of telecommunication services is capital expenditure. In the BPO section of Bulletin Bites, we would like to draw your attention to accounting for property, plant and equipment, that is PP&E. PP&E are assets of the business meant for long-term usage. They are physical things that can be touched and are not held for sale in the normal course of business. Example, machines, buildings, vehicles. PP&E help the business make money by producing or supplying goods or services, renting them to others, or using them for administrative purposes. However, PP&E gradually depreciate over time, impacting the overall profitability. As per Accounting Standard 10 issued by the Institute of Chartered Accountants of India, ICAI, PP&E are recorded at their cost, covering purchase price and related expenses like installation, transportation, taxes and site preparation. Depreciation based on useful life and salvage value is applied annually to account for the gradual loss in value. Regular assessments for impairment are necessary with any identified losses impacting the profit and loss statement. The retirement of PP&E, whether through sale or scrapping or obsolescence, requires adjustments to the balance sheet, reflecting gains or losses in the profit and loss statement. When you follow these accounting rules from ICAI, you can better understand how a business is doing financially and where it stands. This helps the people who are involved or interested in the business to make smart choices. Dear viewers, with this we would like to conclude our Bulletin Bites. As usual, For detailed information, refer to our newsletter and get in touch with us. If you found this bulletin informative, please press the like button, share it with your colleagues and friends. Stay tuned, stay safe, and stay updated.